Greetings everyone. Welcome to Inside Pavaki. This is our second episode. I hope you all enjoyed our first episode. If you missed it, we have given a link to our first episode. You can click on the link below and it will take you to our previous episode. Here, we discuss various globally traded companies or stocks. I'm Subha and with me, I have Maithili, Michelle and Surabhi from Pavaki Capital. Hi Maithili, will you please help us know more about Pavaki Capital?
Sure, Subha. Pavaki Capital is a US-based hedge fund that focuses on dynamic multi-strategy investment style. The company has solid past performance record, outperforming major benchmark indices. And would you believe it? One of the unique things about Pavaki Capital is that it does not charge any management fees. Management fees are zero, unlike others that may charge 2%. Also, Pavaki believes in fair profit sharing. Investors keep 80% of investment gains. And last but not the least, Dr. Ashok Patel, the founder of the hedge fund, is a man of principles. He believes in Gandhian philosophy of honesty and integrity. The man does not even have a driving ticket.
Wow, that sounds interesting.
Yes, indeed it is. Dr. Patel has 30 years of investment experience. In fact, he has invested the majority of his savings in Pavaki Capital, the same pot as investors. You can learn more about him and Pavaki Capital by visiting the website www.pavakicapital.com.
Alright. By the way, ladies, do you know where frogs deposit their money?
Frogs.
Yeah, actually they deposit in a riverbank. And with this, with our second episode, so today we are going to discuss NextEra Energy.
Yes, Shubha, we applaud the big climate changing ideas of NextEra Energy. They emphasize clean energy, solar and wind energy, wonderful for the world. Currently, many analysts and financial journalists sing NextEra's praises. Interestingly, many hedge funds own NextEra Energy.
So why is NextEra's stock so high? Let us investigate and discuss with our speakers. Michelle, can you please walk us through the company?
Yes, hello everyone, and thank you for inviting. NextEra Energy, a Florida-based company, is one of the longtime leaders in the renewable energy industry. The company has two key businesses, Florida Power and Light Company and NextEra Energy Resources LLC.
Wonderful. Let's talk in detail about how Florida's power is set to grow.
Florida Power is one of the largest electric utilities not only in the state of Florida, but also in the U.S. This electric power leader focuses on investing in the generation, transmission, and distribution facilities. It provides its customers with the value proposition of low customer bills, high reliability, exceptional customer service, and clean energy solutions.
Inside Pavaki is brought to you by Pavaki Capital. That's great. Actually, I'm curious about its second key business. Let's discuss how NextEra Energy Resources is expanding its base nowadays.
NextEra Energy is the largest generator of wind and solar energy. Also, it is the largest leader in battery storage across the globe. It focuses on the development, construction, and operation of long-term contracted assets throughout the US and Canada.
Okay. And do these two key businesses work together in any way?
These two subsidiaries work together to achieve objective of lowering cost and creating efficiencies for their businesses. They also assist the company in producing clean, zero-emission electricity from 7 commercial nuclear power plants located in Florida, New Hampshire, and Wisconsin.
Thank you for the input. So now we are heading towards our next questions about Target Real Zero.
Under the leadership of Mr. John Ketchum, the company has targeted real zero carbon emission by no later than 2045. And this step has made history in the company's record. FPL plans to reach its interim targets through the modernization of its generation fleet in Florida. This will comprise a diverse mix of solar, battery storage, existing nuclear, green hydrogen, and other renewable sources.
A country changes drastically when a flood hits the nation. The basic reason for flooding is heavy rainfall in coastal areas and melting of ice. A flood can also affect our surroundings like degradation of aquatic plants, lowering water quality, and stopping coastal reproduction. Approximately 44% of disasters have been caused all over the world due to flooding. We can stop flooding by doing some basic things, like keeping our drainage system clean and stop cutting down trees. It is our duty to keep our environment healthy. Let's join hands to build a healthy environment.
Where does NextEra stand amongst its electric utilities peers?
The electric power industry contributes around 5% to the US GDP each year, and NEE has the highest market cap within its domestic competitors.
Wow. Can you share a few statistics for the NEE and its peers?
Sure. Duke Energy is NEE's biggest competitor. It has 8.2 million retail electric customers and it distributes natural gas to 1.6 million customers. On the other hand, NextEra Energy has been providing electricity to more than 5.8 million customer accounts. The Southern Company has been serving around 9 million customers and its global pair, Enel, has a customer base of 75.9 million customers.
And how about generating capacity?
So the net generating capacity for NE is somewhere around 28.5 gigawatts, and that for Duke Energy it's 50 gigawatts. Southern Company is somewhere in between the two, that is 43 gigawatts of nameplate capacity, and Enel has the maximum, that is 92.7 gigawatts of installed capacity. And do you guys know that US is the second largest consumer of electricity with 40,000 terawatt hours? Interesting, isn't it?
Actually, yes. That's interesting. Thank you for the input. Inside Pavaki is brought to you by Pavaki Capital. Now we are moving on to the next era's valuations. Michelle, can you expound on it?
Sure. Let's begin with valuation. NEE's PE ratio is 36 times, which is higher than the regulated utilities industry's average of 17 times. And its book value per share stood at about $19 last year. During the past 5 years, NextEra's BBPS has grown by an average of 4.5% per year. And as of February 3, 2023, NextEra Energy's dividend yield is 2.3%.
Alright, so what are its EV multiples?
For EB to EBITDA ratios, it stands at 23 times, while its EB to the revenue ratio yields 10 times, which is above the industry median of 2.5 times. These high valuations are basically due to a sharp surge in NextEra Energy's price, which has risen by 37% since 2017. The surge in price is quite higher than other companies in the same industry.
I agree. So, financials seem stretched.
The growth has been weighing on company's balance sheet. In Q4 2022, NextEra had almost 55 billion of long-term debt. plus another 5 billion in the current liability section coming in the form of commercial paper, short-term debt, and its current portion. Relatively, the company held only 1.6 billion of cash and cash equivalent.
And that is totally not a great scenario.
Exactly. The huge debt load creates a large interest expense, which can pressurize the company's financials. NE's interest coverage ratio now stands at 2.5 times. And further, the growth plans and targets will warrant more investment and capital expenditure.
So now what do you recommend buying the stocks?
About 15 analysts recommend NextEra's energy stock, but we declare lights are out for NextEra. NextEra does a fantastic job in their business, but investors are grossly overvaluating it.
I agree. Inside Pavaki is brought to you by Pavaki Capital. Now, turning to Maithili, will the company be able to generate enough cash flows to meet its requirements?
I doubt that, Subha. The cash flow on operation has increased in the past few years, but capex has increased even more. The company does not generate free cash flows. Still, it continues to pay dividends, besides obviously paying the interest payments. No wonder the company's debt keeps increasing.
Agreeable. What do you think the company's dividend yield of 2.3% will continue to satisfy investors?
While 10-year US Treasury yields about 3.4%, NextEra is boasting valuation ratios as if it is a Silicon Valley startup. Its price to sales is 7 times and EV to sales about 10 times. That's quite high.
And how well are they coping up with their investment in renewable energy?
Hurricanes in Florida have damaged the company's property considerably. The company invests so much in renewable energy, but we do not exactly know how much maintenance capex is required to keep up the solar panels and wind turbines. Most financial media doubt company's heavy investment in renewable energy. But if the investment does not produce an adequate return, the company's economic profit becomes negative.
Will Florida continue to grow at a brisk rate?
We believe in companies' progressive ideals, promoting sustainability, but the free cash flow has to justify the stock price. We appreciate companies' efforts to move towards cleaner energy. Also, its business model mix will create positive impact on environment. It will likely increase the company's earnings and cash flows in the future. But the company's high growth trajectory comes with a stretched balance sheet. Also, valuations have been running high. A high debt load plus tall valuations might prove to be roadblocks for NextEra to become an ideal investment case.
That's quite an input. Thank you, Maithili. That brings us to the end of our second episode. Thank you, Maithili, Michelle, and Surabhi for joining us during the great discussion on NextEra Energy. We hope the information was beneficial to you. Thank you for listening to Inside Pavaki. If you enjoy our show, please comment below and be sure to come back for the next discussion. Until then, this is Shubha. And please note, we have input the numbers from a variety of sources. For more information about stocks, ideas, blogs, please visit our website at www.pavakivirtualwatercooler.com. I repeat, it's www.pavakivirtualwatercooler.com. This podcast was created by Pavaki Capital team. Please note the information presented herein is provided solely for discussion and illustration purposes and is not a recommendation, offer, or solicitation to buy or sell any securities. Kindly consult your financial advisor before making any investment decisions. For full disclaimer, please visit www.pavakicapital.com.